Welcome to the show. Let's talk to a firm favourite here at Core. We've got Nicole Elliott, a technical analyst and a private investor, amongst other things. Morning to you, Nicole.
Hello.
Right, we're going to do emerging markets today. You've sent 3 charts. Let's kick off with without further ado on Brazil. This looks quite tasty, doesn't it?
It does. And I'm often accused of being a perma bear on developed stock markets, and I am quite still perma bear on those. That's why I have picked out emerging market ones
to cheer
because
us
they
all
look
up.
very, very different indeed. And in fact, one of the things I wanted to say is that all investors suffer from what we call anchoring, and when we first start watching markets and getting involved, those early experiences tend to get impregnated in our idea of what is the right value of anything.
Yep.
And that's why I'm really pleased that Mr. Thaler won the Nobel Prize for Economics this week, because he was the one with the nudge idea and behavioural finance and all the rest of it, which is something I back wholeheartedly as a social psychologist myself. But what also happens in my experience with the FTSE, with the Dow and other, developed markets, is that I've seen one crash too many. I've actually lived through one crash too many. And in fact, even the Nikkei, where I understand Nick Leeson is out saying, oh, isn't it brilliant? If Barings had waited 21 years, my trade would have come good. Well,
go to our website. I interviewed Nick Leeson last week if you want to see the video. I thought it was a good interview. Sorry.
Yeah, well, the Nikkei still today is worth half of what it was at peak in 1990. And quite frankly, I don't have that sort of time to wait until I cash in my pension. So forget it. So let's go out and look for something good. A monthly chart of the Brazilian Bovespa, which has been in a kind of holding pattern since the low of 2008. Okay, we're below peak still, but we're sort of getting there, and it's looking quite a lot better. The middle bit, those bars there, that's volume, and you can see that the volume really spikes when it goes down.
Yep.
And then when it goes up, it's sort of, well, I don't know, this year is sort of like averagey. Yeah, it's like, and that hints that people haven't spotted this one. They're not looking clearly enough. And at the bottom, that is the observed volatility. And you can see it's super, super low. Now, as an investor, I like that.
Yep.
I like a steady trend.
Yep.
I like a market that is not on
fire.
Exactly. And it's not in everybody's sort of sight. And what we've had in the last 3 months is 3 consecutive, fairly decent sized bullish candlesticks.
Yep.
That's called, when you chart in black and white like we used to do in pencils, that's called 3 white knights or 3 white soldiers.
Which is a continuation pattern which basically shows further strength ahead in the medium term, if I remember correctly.
Correct. It says that there's good momentum to this market and we're on our way. We've just hit record high, this month, at 78,000 on this index. And I reckon there's a good chance of moving up to 84,000 in the not too distant future.
Okay.
I like it.
So this is good homework. Let's move on to Indonesia. We're looking at a quarterly chart. Is this the same sort of picture?
It is, but slightly different.
Okay.
In that the Jakarta Composite Index was, like India, in an absolute straitjacket, and only sort of the genie was out of the bottle not until 2003. Like India, and it's to do with a significant shift in the political landscape. That's what's causing both India and here in Jakarta. Because let's not forget that in post-war independence for this nation, this vast nation, the following 50 years were totally dominated by Presidents Sukarno and Suharto. So you had over 5 decades worth of sort of impasse with these, strong leader type people, similarly to India with Indira Gandhi and her family. And then suddenly the genie's out the bottle. And what you can see, I've drawn it in there, that you've got this right angle triangle. It's been bullish since 2009's interim low, yeah? Volume's been steady, but again, spiking when it looks a little bit, but volume's average. And volatility on the bottom again is almost at record low. That is good. Again, it's one I like. We've closed on a quarterly basis 3 times above the top of that right angle triangle, okay? So we've got, this has got form.
Yep.
I'm not saying this is brand new. We've
Yep.
got form. It's moving slowly. I like that. Vol is low. Why not?
Again, good homework. Let's move on to a firm favourite in terms of a holiday location for me, Thailand. Quarterly chart, again, these are textbook charts, right?
Well, this one's not so good, actually, Nick.
Is it
This
not?
one is not so good because the record high...
I'd be buying that market
Well,
on that chart.
Yeah, but you've struggled because the record high was actually set in 1994.
Right.
And we've just about matched it. So again, it's a kind of a Nick Leeson type trade, isn't it? I mean, it's been a long time coming, this one.
Right. So would you buy the breakout of an all-time high?
We're not at all-time high yet. We're nearly there.
Right.
And that's what I'm waiting for.
So
on
you would
this
buy
one.
the new, you wouldn't preempt it.
I don't think so. And look at the volume here on the right.
But that's encouraging, isn't it?
Well, I don't know, because you're in a triangle. Why is everybody getting so
But you've
excited?
broken out of the triangle.
No, but look, the volume has peaked at the beginning of the triangle.
Okay,
Yeah.
I like that.
Yeah.
So that's not quite
like,
right then.
It's like, oh, we're so excited, we're going higher, the sky's the limit.
But the buyers
And suddenly-
aren't coming in.
Yeah, exactly. So, it's a little bit more iffy, this one. But I do think that it's about time that we made a new high. Absolutely.
Okay. So is Nick Leeson going to tweet out on this one?
I don't think he's on the radar. He's still obsessed with the Nikkei.
Right, final words. Let's talk about the majors. We had a guest on the show today, Bill Blaine. For no particular reason, he suggested the stock market correction today. Okay, going into Friday the 13th, he thought everything was ripe for some sort of pullback. In terms of the charts, you've been this uber bear or bear. Are they still looking sort of big picture stuff quite dangerous?
They're not looking that good. Really, I can't, hand on heart, I cannot recommend buying any European index. And as for the US ones, the price action recently is really unusual. These tiny little ranges every day. Friday the 13th, okay. October, okay. It's not exactly 50-50 that will go down or up. But that's not enough for me. I need some really clear bearish candles. Forming on a daily basis or a weekly basis or a monthly basis to say we've topped.
But you haven't had the signal on the charts yet to go aggressively short.
Not at all.
In terms of
Not
your
yet.
analysis.
But I am looking for signals. I am looking for signals that tell me these have peaked again.
Bearish engulfing patterns, ladies and gentlemen. Nicole, as always, thank you so much indeed for your time. Thank you.